The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a gorgeous and beautiful Friday, September the 7th, and wonderful weather out in the headquarters of technical trading and investing if you're a duck. But other than that, not too bad. Just a little rain into each person's life. Some must fall, I guess. It is Friday, September the 7th. It is Google's birthday. They were actually founded this day in 1996 when I think it was a Stanford professor, took a loan out on his house, gave them $100,000 to get started. That $100,000 is now worth about 1.1 or 2 billion last I checked. So the guy probably did fairly good on that investment, I would think. One of the few Stanford professors that are worth $1 billion. I met him for a few minutes. At the same time, SGI, Silicon Graphics, big computer firm that worked with, mostly the early days of computer graphics in television in Hollywood. I met a few of them out there. One of the other ones was the head at the time, John Clark from Silicon Graphics. But some of those guys were actually fairly decent businessmen. About 98% of the ones I meet are horrible businessmen out of academia. But these guys were pretty sharp guys and knew exactly what they were doing and knew how to turn it into some money and wanted to, and they did. Well, Google, those two, basically it was the professor and his two students got together and made the search engine and put it together, and the rest is history. Lots of news coming out and around, but each day Google gets about 1 billion searches and requests from all over the world, including from Antarctica. So every continent, island on the world, pretty much. So anyway, interesting. This morning, what we have, hopefully you're seeing this on Tiger TV right now. Hint, hint, hint to my engineer. We have video footage of Ben Bernanke as a child. It has just surfaced and wanted to show it to you. But there he is, standing in his little window, throwing his money at us, as he's like to be. In fact, this is what all the wizards of Wall Street want you to believe over the last couple of days, is that we are full on for QE3. I just can't even start to get tired of watching him as a child just throwing money out the window. But anyway, it is one of these things. If you're watching on Tiger TV, hopefully you are, or in the den. But this was an animated GIF sent out by about 5 minutes after the employment numbers this morning in a analyst's recommendation, and this thing has gone viral. I've gotten it from about 20 different people and seen it on every website in the world, but it does make me think, as Ben Bernanke as a child, before he got his helicopter pilot's license and was able really to throw money around. But of course, I think it's a 2-day meeting next week, the 12th and 13th. I'll have to check on that during the break, but I think it is 12th and 13th. For the next FOMC meeting, and they're just positive that he's going to do something. I'm just positive they're not. They don't act during elections, and it would almost be tantamount to the fact that the economy's in trouble. So I can imagine that even the current president would probably say, lay off, nothing's going to change that much between now and the election, and just stand back. But I'm going to be pretty much betting that the language changes slightly and they do nothing. Or if they talk about doing something, it will be after the election. The Treasury will be very active, as they've been every morning. As soon as the weakness came in this morning, they were right back there. You could see them firing off the trades and underpinning the market as we want. In fact, I could watch the rest of the show just watching this little kid throw this money. This has got to be the best. Anyway, going to be interesting out there. Google is activating 1.3 million Android operating systems a day. Eric Schmidt, the chairman, revealed the company is now activating 1.3 million Android devices on a daily basis. And just to give you an idea, I've got a chart that I'm going to show tonight in the 4 o'clock hour with Tom O'Brien. They basically, this thing is getting on a curve that makes me think of Qualcomm in 1999. These guys are flat laying it down to go from July 900,000 units to 1.3 million units at the end of August is just mind-numbing to see how many things that they've got their finger in. Granted, they're not making a lot of money on their operating system, but one day when they find out how to truly cash in on this, this may be a company that bypasses Apple so fast it makes your head swim. I'm still waiting for that before I invest, but if a company was running on all cylinders, I think it's Google. Probably the thing I think that's going to make the next big, huge move is they've been in their, I think it's, they've got little kind of hidden alcoves of development. And the one that they're throwing the most money at right now is a Siri-like device that hooks up right to Google search. And I think that when that comes out, I don't know how Apple would ever come close to competing with that kind of search technology. Google is far in advance of even Bing, and Bing is probably no slouch. Apple would have to come up fairly quick in the search engine category to make this thing work. But Google is cool. A little factoid here I saw today that was very interesting. At the present rate, Tokyo, one of the most densely inhabited cities in the world, will fall by half by 2100, with nearly 46% of those residents past retirement age. Of course, that's a long time, 88 years from now, but it's kind of funny to see that they're basically almost everybody's having two children or one child in Japan, and they continue to have a great deal of people that are elderly going on the rolls, but certainly not making up the kind of population growth that you see everywhere else in the world, and actually having a hard time, even though a lot of rates are very high for Tokyo real estate. They're talking about yet another plunge unless they get a lot more people to move into the big cities. And of course, it had nothing to do with Godzilla. He didn't stomp on any, if anybody was wondering. Anyway, if you looked at the German, the only language I took in high school was German, so I know just enough to be dangerous, and was over there quite a bit, and actually got to walk around the streets in München and all the other wonderful Ich bin Berliner, if I wanted to remember my Kennedy speech correctly. I, of course, remembered the only thing that was really worth knowing, and that is Ich bin Mädchen ist ein heiß. The girl is hot, is what I remember. But I haven't been able to use that lately. I haven't been over there. But if you look at the newspapers, they are absolutely slamming our wonderful friend Draghi. We, of course, are going to have a decision by the Supreme Court of Germany on the 12th on whether or not they will be able to actually bail out the rest of Europe. Everybody's got pretty much a bet that 100% that they're going to say okay. The devil may be in the details of what they say that Germany actually has to do, i.e. an election, some kind of referendum. What would it take to be constitutional. I suspect that a lot of people are betting that they just say, give them a big rubber stamp and that's it. I suspect from reading all the magazines and newspapers in Germany and looking at them, they are really hammering him. It's going to be hard for me to believe that the Germans don't put a lot of restrictions on it. Funny enough, that all the bonds he's buying in treasuries and everything else are all under 90 days right now. So at the moment, all they've really done is kick the can down the road for 90 days. I don't know if that's to get it past the elections here in the United States, so they can maybe get some U.S. help, but pretty consistent and consolidated effort from all of the central banks and the treasury departments of most of these major Western democracies and socialist democracies. The U.S. labor force participation rate, which is what everybody freaked out on this morning, is back to the level of 1980. A lot of people just quit looking for jobs anymore. And the employment rate. And if you looked at the, what is it, the Q6 number? Is that the right one? The Q6, I believe, is at 19.5%. So if we were really actually counting the correct way, it would be much higher. If we compare it to 4 years ago, from 8%, it would actually be, or 8.1%, and just adjusted for the inflation in the numbers, it would be 11.6%. So, you know, it's kind of hard to figure out. Statistics don't lie, but liars, right, what's the saying? Figures don't lie, but liars can figure. And, of course, these numbers, since they were started, have been pushed on, edged, folded, mutilated, stapled. There's nothing that they won't do to these numbers, and of course everybody comes along and the next one tries to make them look a little bit better, but pretty dire shape, and why everybody believes that QE3 is coming. I suspect it is not until after the election. So we've got a lot of stuff going on here. Also, we had Intel come out with a warning, and it'd be kind of interesting to see how this thing has decided to play out today. If we were actually going to Intel actually get, you know, we're back down here pretty much on higher volume. We are back down, but we really needed about 61 million shares. I think we're going to get that and more today. So we've been trying to break down through this $24 level that has been fairly significant support levels in Intel. Looks like we're going to come back in it. I suspect that Intel's sandbagging everybody as much as possible. There's been a great deal of people not wanting to buy the computers before Windows 8 came out, and I suspect it's really hurt a lot of these companies. We looked at AMD earlier this week. Intel, I think, will probably be the much stronger of these two. AMD still fairly weak. I welcome your calls at 877-927-6648. That's 877-927-6648. Give me a ring.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we've got a phone call, and it's Bill in New Hampshire. How are you doing today, Bill?
Not bad, David. It's a happy Friday.
It is a happy Friday. So what do we want to talk about today?
I wanted to talk a little bit more about a follow-up from yesterday on OCZ, and just mention the fact that they have a controller that they've got in-house. It's the Barefoot 3 that's ready to go. And I wanted you to comment on that. The controller, I believe, is what controls the SSD part of it.
Right, yeah.
And their SSD is probably bar none the best on the market, but I think their controller bar none is going to be the best on the market, and they can sell the darn thing.
Yeah, they've got, they probably have the best technology. The question, again, like I talked a little bit about yesterday, was if you've got a car that goes 210 miles an hour, but, and you've got one that goes 190 miles an hour, that's the question is, are people willing to spend that extra 20 for that extra 20 miles an hour?
I can answer that.
Huh?
I can answer that.
Well, go ahead.
A gamer, anybody who's playing games, video games or graphics, would definitely want to pay the difference. Right.
The question, though, is the machine that you have going to make any difference? Mm-hmm. When you put these things in, it's like you threw a turbocharger and a blower on a car engine. Because it is so blazingly fast. Even the slower ones look like you got shot out of a cannon. That's what I'm saying. It's very hard for people to figure out that last 20%. The people, the last 20 miles an hour, the people that can really use that last 20 miles an hour that OCC delivers are people in server farms, in cloud systems. There's a lot of people that can truly use it, especially virtualized servers when they get the virtualization out on these.
Okay.
And that's where that's where this company can really take off. And that's why I'm just saying maybe we need to wait for the whites of their eyes on some of this stuff. Now, as far as a chart, we got what's probably going to be considered an exhaustion day yesterday. And we're probably going to have a little bit of a bounce. You come back and you test 390 on light volume. I suspect that somewhere around October, the whole thing where everybody's not buying anything until Windows 8 comes out, hopefully will be over. But right now, no one wants to be buying any Windows 7 machines with Windows 8 coming out until they know that it's, quote, quote, Windows 8 compatible.
I got you.
For all the features. So, you know, I was talking to Steve Rhodes. He's been nursing several little laptops along the way, and he's got to either take...
I'm doing the same thing, but I'm just a consumer. I probably only buy 1 or 2 computers this year, but I've been waiting for that.
Right.
Frame, yeah.
So I think a lot of this stuff, Intel also coming out and saying that they're going to bring their forecast down. It's just been a very slow summer, and I suspect that once we get through October, that's going to change. And a lot of these products start shipping, especially for Microsoft. The big guns that really make these kind of things worth the money are web servers, databases, a lot of stuff. Games are fine, but more and more there aren't any new games out for PCs. I mean, they've been very light this year. If you go back and look, if you go into your local Walmart and look at the games now that are out for PCs, the people that write these things are really just trying to stay away with them and focus mostly on Xbox.
Okay.
It's the same code, but they really, since the cartridge and the disc, the way it's set up, it's so hard to pirate, they would rather do that. Now, there's a lot of other things that make it tougher to actually sell in the PC world, but they know if they make one version of it, it's going to work on an Xbox. There's no real technical support, and they're really fading away from that marketplace. I personally think, 3 monitors and a first-person shooter game exactly what I wanted. Actually, I bought an OCC drive yesterday or the day before. Should be here Monday. It was $60 for a 60-gig drive. It was a Vertex 3. And they had a one-day sale on it on, I think it was Tiger Direct or Newegg. Anyway.
Maybe you could just talk a little bit about it next week.
Yeah, well, I've already got one. I've got one of them already, so it's not going to be anything new for me. But I mean, some of these things are getting awful cheap, and that's part of the problems with these companies is they have to get ahead of the power curve on new memory, faster drive technology. But the thing that's going to make OCZ fly is a lot of that stuff that's specialized for server farms and websites. Thank you very much, Bill.
Okay, I own it. I'm holding on.
Okay.
Okay, bye.
Bye.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Oh, boy. Anyway, we're looking at some stocks out here. They're trying to give some signals. MIPS Technology, we're looking at some of these chip companies. Maybe we'll go back to Intel and Microsoft in a minute. MIPS is one, of course, million instructions per second, if you didn't know what that meant. So it was one of the bigger chip companies for years. They make or specialized in what's known as reduced instruction set chips. A lot of chips like Intel processors that are in your particular computer have a lot of different commands. They basically make a lot of chips that have fewer commands but can execute those few commands much faster. So just think of it as kind of a slightly different way of doing stuff. What I'm looking at MIPS out here, though, and a lot of the stocks in the market is low volume tests and retracements above the previous high. April 19th, $7.38, 3.3 million shares. You go into September 7th here today, we got to 750, so we have gone above it, probably going to close below it, and volume is not going to be a whole lot, maybe 50% by the close of the day out here. Starting to see a lot of these stocks be somewhat weak at these tops. I suspect that a lot of that's going to be waiting for the FOMC announcement and maybe even a little profit taking going into the decision by the Supreme Court in Germany. A lot of unknowns. don't see a lot of people worrying about that just too much yet. We're on the second day of what is going to be fairly decent short covering, so some of these stocks, especially if they're short, may have one more day in them to crowd out the people that were way too margined to the downside. Normally you get a 3-day move out of it, which takes us right into the Fed and lighter volume. But I suspect, we're probably going to see some kind of little last gasp, and then maybe a sell-off early Monday, maybe Tuesday morning, something like that. And we'll see how this thing pulls back. But I'm kind of looking into that. Let me see what we have here. Get back up here for volume. Just wanted to make sure. I think we're probably headed back down to about 1424 as support. Probably Monday or Tuesday. May get another 5-point bounce out of the S&P, something like Monday morning or something. I suspect we're going to start seeing people start taking a little money off the table before light volume FOMC meeting. Look for probably a little pop right into the close on Monday, as that'll be the end of anybody that was way too margined and had to cover at least part or all of their short positions in this. But, we got up to pretty much what I was thinking, which is going to be extreme resistance, which is 1440 on the S&P cash. And, we got 3 points there. Could we bounce back into that? Yes. We've got about 2.7 billion shares, which means we're going to come in probably a little lighter than yesterday by the end of the market. We had 3.9 billion shares yesterday, which is good, but still nothing to really write home about. We'll look at some other stocks here. Again, you can give me a call like Bill did from New Hampshire at 877-927-6648. That's 877-927-6648. And we will discuss some more of these things. There was a few in here, if I remember right, if I can find the ones I was looking at. Oh, there they are, that were giving kind of a different indication. Up here, the iShares Russell 1000 Growth Index Fund, IWF. We're up here against a fairly strong previous highs. On this one is the April 2nd high, $66.84, 4 million shares. We've gone good 25 cents above that on September 7th today. Maybe $67.11. So yeah, 2.2 million shares yesterday. Well, what do we have here? 1.8 yesterday. Probably going to be. That's probably not right today. I'll have to take another look at that IWF. But it would have been kind of. It just looks light. I'm going to check on volume here in a second. But very interesting. Okay, what else do we have going on out here? Marvel, or Mylan, excuse me, Mylan, M-Y-L. Trying to remember what these guys do right off the top. Another one that caught my eye. They have a kind of a small breakout. They actually did, one of the few companies that actually came and broke out and had decent volume. Let me see what these guys do again. Development, manufacturing, marketing, license, and distribution of generic and branded generic pharmaceuticals. They're breaking out here on fairly decent volumes, kind of interesting. The last high was April 2nd, $23.63, 4.1 million shares. We had 4.8 million shares yesterday in Mylan. So kind of interesting one to keep an eye out there. Let's see what else we have. Oshkosh Bigosh. Another one that had of course, the overall maker. Another one that had come down on just huge, massive volume, and what was that? 9 million shares on the June 28th on just massive volume out there. 9 million shares. That gap has stood, came into it with 1.5 million shares that was last year, excuse me, January 31st. This year we had 2634, 1.5 million shares. We've got basically 230,000 shares Yesterday we had 800,000 shares. So a lot of these stocks, as I show these, are just ones that are coming up against massive resistance levels. People just dying to get their money back that have been caught in this downtrend for a long time. And we've got actually quite a few of those. Teradata Corporation, another one up here, looking rather interesting. The last major high was on May 3rd. $79.87, 5.3 million shares over the last couple of days. What do we have? 1.5 million shares yesterday. Probably going to be 1.2, 1.3 million shares today. But a lot of these stocks kind of running out of gas, and I suspect we may have seen a blow-off top yesterday in the marketplaces. But, you know, we might just get just a smidge higher over Monday and see these markets start to pull back to 1424, and that's going to be the interesting part of it. What else do we have? iShares Russell 1000 Value Index Fund telling kind of the same story that these others are, other than it's, I think, holding up a little bit better above previous highs. IWD for this ETF. We're seeing the May 2nd high, $70.88, 1.6 million shares. Over the last couple of days, what do we have? Not a real sign of strength yesterday. We're on 1.1 million shares. And I think my volume's off here. Let's see if I can't cure that here. A little bit better. And redraw this thing and see if I don't have better volume. There we go. 447,000 shares. So, yeah, just a little bit weak out here in some of these ETFs. Gold looked like it was really taking off today. Let's see if I can get a quote on that here real quick. GLOLD. As we come back, what do we got here? 111.91. This thing has popped out. One of the few of these gold stocks, saw a lot of them that were looking fairly weak. This was the strongest looking one. Now you've got two nice gaps setting up over here, and you could almost say this is a gappy little guy. But you've got one big gap followed by a second gap. You might have one last gap out on here if this thing's making a three-gap play. I did gap above a previous gap that goes back to the 14th of March. So kind of a double gap back in there. Certainly yesterday you had some decent volume. Looks like we're probably going to close lower than the open out here. But also going to be very interesting to see how gold reacts. I suspect that everybody's buying it in front of the FOMC meeting for a little bit. GDX was one of those ones where we're talking about how some of these have reacted in the marketplace. This one is another one that kind of has gapped up a little bit on us. Let me get a little bit better chart out here. Looks like gold miners, GDX, wants to make a run back up to 52, and we might see that on Monday. It's got a nice little gap that actually had some decent volume down, which will probably act as resistance for this. That happened on 314 and had 24 million shares. Looking like we're getting awful close to that. If this is right on 10 million shares today, going to be a little weaker on when it hits that gap. What else do we have out here? ATU, CVR, VTI. Oh, we've got Mohammed from California calling. How are you doing today, Mohammed?
Good. How are you doing, David?
Fantastic.
I was wondering if you could take a look at RL, Ralph Lauren.
What are you doing with this? Are you long already?
Actually, I was trying to get in, but missed a chance earlier today.
Yeah, I certainly the risk reward is fairly low. You had the buy point that really stood out back at the lows. That was on June 28th. You got down to 134.48 on 2.2 million shares. You tested it with half the volume on July 12th, and that set up the bottom on that, which was probably the best point to be buying it if you were considering it. Now the problem is you are right under a huge amount of high volume down trend, and this is going to be where you're going to be slogging it out. So you're thinking about going long?
I was thinking about it, but now that you're saying, looking at the charts, probably would be a better short around 165 or so, wouldn't you?
Yeah, to tell you the truth, I think that there are a lot weaker retailers than Ralph Lauren out there that are probably going to get smacked around a lot more. And certainly it's the mid-range and lower end of retail that I see getting smacked, not the higher end. Okay. And this is not, it's not all that bad out there. Can it pull back down to 154, 153, down to that gap? I think, yeah, it's going to have some fairly decent support, probably 152, 153 right in there. But it's not. There's a lot more that I've looked out there that are weak, that I think maybe you want to look around a little bit more on that. Okay. But are you watching on Tiger TV?
Oh, yes, I am.
And you can see all those little gap lines that go from the left side of the chart to the right, and you're going to have to hammer through all of those. 2.7 million shares for that big long candle from the May 8th. And yeah, you've got, what'd you have the next day? That was probably the biggest candle, and you're right in that right now. So everything is above that's going to be fairly heavy trotting. I just can't see this being either a short or a long, really. Just my opinion, though.
Okay. Thank you so much.
Okay. I'd look at some other retailers that have already had some significant weakness. Don't remember the symbols now, but a lot of if you've already looked, some of those dollar stores, on the low end seem to be having the worst luck already, and you might catch some ABC downs on those. I haven't looked at them the last few days, but I kind of, in the back of my mind, remember seeing a lot of those less expensive ones. You've got to look at things like Walmart also. Does this thing look fairly weak? And the answer is yes. It came up. It hadn't tested the high quite. But when we look at like Target and Walmart, the last high on Walmart was July 30th, $75.24, 10 million shares. You got into just fairly close to it. What 40 cents short, 43 cents short yesterday, and it came in at 6.5 million shares. It just seems to me like a lot of these less expensive ones seem to have a little bit more problem. I think TGT is Target, give you the same kind of thing. What did we have in it yesterday? 9 million shares on August 15th at basically $65 minus a penny. Yesterday you got within a little bit, but basically 3 million shares. So to me right now, these are the more weak side of that part of it. If you're still there, Mohammed. Yeah, I guess he's gone. Okay. So those are the ones I'd start looking at, maybe some of the other retailers and discounters, because these guys are actually starting to look a little bit more weak at here than some of the other ones. Let's see what else we have. How much time do I have? Just a few minutes in this segment. You can still give me a call, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Let's see if I can actually type here. It's always different on every different keyboard. AMZN. I'm so used to my ergonomically correct Microsoft keyboard that it's almost torture on any other keyboard, especially after you've been using them for about 10 years. Amazon, nice little pop here today. Someone asked in the den what I thought of the new Kindles. I talked about it ad nauseum yesterday and thought that their very least expensive ones are probably were interesting. They have a new thing called white paper, which is a kind of like just a black and white version of it that's very cool. Will last up to 8 weeks on battery life on just this constant display. But mostly made for a reader. The one things I don't, and everybody probably didn't think about it too much, you've got Apple with their iOS tablets. You've got Microsoft with their tablets that run basically a form of Windows. Then you have, of course, the Android ones that are running Android operating system, which is based on Linux. And then you have the Java-based ones, which are what Kindle runs on. Unfortunately, the ones with the absolute least amount of software are the Kindle ones. Lots of people have Java and use it for different things, but very few people have a lot of interface stuff on Java. Mostly it is a kind of a backside to processing a lot of data. Now, it's not used for graphic interface work all that much. So it's got the least amount of software. They've got a couple of interesting things, though. If you go to their most expensive one, it has LTE, but it's about $500. But they're talking about a $50 a year policy for getting LTE data. They didn't go into detail about it yesterday, but that would be kind of cool if you didn't have Wi-Fi or you wanted to go around. The only reason I thought about it is if I go to the beach, it'd be neat to be able to get my stock quotes right off the beach there, where you don't get any decent Wi-Fi. But $50 for the year probably wouldn't be bad. My guess is that the limit for data is extremely low, though. But might be kind of interesting. Their new products, just like last year, they make a lot of yelling and screaming and talk about how nice they are. In practice, when you got them, they just weren't all that great. I still think that the Nexus 7 on the low end, like I told the customer yesterday, is still the hottest product out there. It's on Android. There's huge amounts of development for it, huge amounts of applications for all the Android ecosystem, as everybody wants to call it these days. And I just don't think that they're getting a nice hop because they're saying that they're going to push these things out, and it's the Razer Blade and Razer marketplace, so that they're going to start selling a lot more things, saying, if we just sell 2 books, we're going to break even on these things. To me, I don't like it because they're also going to be forcing advertising on it. The new white paper thing is kind of interesting because, like when you think you've turned it off, it'll go back and put an ad on the thing. And so you're standing around there. It's almost like having a magazine, and you're always looking at the back page of the magazine with the ad on it. Apparently, the way they've got this thing set up is when it goes into hibernation mode, you're going to actually see for a long time a ad to support a lot of what they're doing. Quietly, Amazon is getting into the advertising business with these Kindles. And I think they're okay products. I just think, to me, I don't want the ads. I like the other products. We are going to be in the first hour of the Tom O'Brien Show today, talking about technology, probably talking a lot more about tablets if you hang on and listen to that part of the show. Anyway, you all have a great and safe night. And I'm Dave White, and I approved this show.